yo, yo, welcome to the show.
Yo YouTube, what is good? Welcome back to another video, Zero to Hero Investing. In this one, we're going to take a quick look at the taxable Robinhood account. If you're new here, we track two portfolios. Both are in Robinhood, but one's my taxable, which is this one, and then there's my Roth IRA, both in Robinhood. If you want to join Robinhood, feel free to use my link in the description. You'll get some perks. For your Roth IRA, you get like a 1% match, stuff like that. Tap in. Diving into the portfolio, we're sitting at $51,284.18. And I should also say that it's Sunday morning. It's only 7:54 a.m. Started my day pretty early, and I'm starting with a video. Portfolio's at 51,284.18, and the markets are closed. Obviously, I don't have like crypto or anything going here, so this is where trading ended on Friday at, I would say, 8 p.m., whatever. That's the chart. It says 754, but buying power, we're at $62.58, and I'll be going over these timestamps in a minute. My buying power is really, well, some changes did happen in the portfolio this week. I'll talk about that soon. I'm usually at around maybe between between $0 and $100 in buying power, let's say, on average. Right now, we're about in the middle of that. I'm just keeping a little bit on hand. I don't know, whatever comes up, I'll buy it. Looking at the timestamps on the day, Friday, this would have been Friday, October 25. It was a good day. We were up 0.72%, and then after hours, just a little bit more, 0.07%. On the week, we're up 0.85% on the month. Pretty good month for my portfolio. We were up 4.23% just for the month inside the taxable. It's pretty nice. On the 3-month chart, we're up 7.02%. On the year-to-date chart, up 19.47%, say 19.5%. And on the 1-year chart, we're up 20.5%, we can say. So not doing too bad. Of the 2.5 years, I guess I've been doing this, I've always lagged the market, and it's cool to see that now we're in October and a lot could change. Everything could change, but we're doing pretty well. I know before my portfolio was very skewed, and now it's starting to get skewed again, but it's doing well. I'm not gonna complain. Looking at the options over here, there's only one option, play, and that's on Ford, and this Ford is just like a thorn now. Like, Ford had really good earnings, and the call I sold is now, it's like way in the money, and I can sell my shares at 11.50. I roll it out one more week. I might get rid of them just to kind of bring my diversity in Ford down some and go more into, I guess Ford is a great company, but if I have to sell my shares because of the option, hey, it is what it is. I made that decision, and I mean, I personally did not expect for Ford to jump 13% after their earnings. So down a lot on that. Whatever is reflected here would be reflect. I don't know if I'm getting too much into the details here, but let's get into the stocks and the ETFs. So the last time I started with I guess the bottom stocks, but now I'll start at the top again with SPY. Right now we're at 14.52 shares of SPY, and I think I came in here with some of the money from a position I sold out of and bought a healthy chunk of SPY. So we're closer to 15 shares than we were a week ago. Let's say that. We're up 12.9% overall in SPY, and this is a hard one to truly or realistically gauge because it's always going to be a diluted total return, given that I buy like the most amount of my recurring investment goes into SPY. So this is always getting diluted. I guess in good markets and bad markets, it's gonna be it's gonna average out. I'm just DCAing into this position. SPY is the 500 largest companies in the United States, and I think it's a very good logic to group your stocks. So essentially, if the US is doing well, and I'm sure that most of that weight will be carried by the 500 largest companies, you can expect this fund to perform well. So in my opinion, it's a pretty good investment. Not a financial advisor though. Next, we have QQQ, Vesco Nasdaq 100. We're up 20.9% on this one. Can't really complain about it. It's just a tech ETF. Really good performance, especially in bull markets like it seems we're going into. So there you go. I'll be buying more QQQ. This one is on a recurring buy. Wish I could increase it a little bit more. But for now, if there's an opportunity to manually buy shares in this ETF, then I do so. SCHD is a slow one here. This is all-time return. We've been invested in it for like 2 years. Of course, we DCA into this one too, but we're break even, literally within $1 of what we have invested. It pays a dividend, of course. It's the Charles Schwab US Dividend Equity ETF, I believe, if I have the order of those words correct. To me, it's a forever hold. It is a staple sort of ETF. Probably not the best markets to show its true colors, or the way the ETF chooses its candidates or its holdings. It's working against it in some sense, maybe, but it's one I expect, and a lot of investors here expect to pick up some steam. Let's say soon. Soon in a very, very long time horizon sense, though. Next, we have Rocket Lab, 77.9 shares of this, and we're up about 162%. I'm trying to get to 100 shares, but I'm trying to do it slowly but quickly, because I'm eager and I'm excited, because I know the potential in being able to sell your shares. But imagine I get another Ford situation and I'm like so deep in the money, like I have all this appreciation, and I'm like, do I sell? Like, do I let it, sometimes it's best to just not mess with options. If you know, you know. I know. But there you go. Rocket Lab, it's been doing well. I mean, I don't really monitor it on the daily, but if it's down, which I know it had a down day this week because I saw the notification, I definitely come in and buy some for that reason. Microsoft, 4.2 shares in that one, up 32%. Microsoft, I also think I came in and buy some. Actually, no, I didn't. We've been at 4.2 shares. I'm lying. Yeah, we need to increase that a little bit. But 32%. Wow, love that, Microsoft. Solid company. It might be a little overvalued, but it is probably like, well, I thought the same about Apple. It's such a great company, like forever buy, and now I don't really feel the same. It's probably because I'm not invested in Apple anymore though, and I don't follow it too much. But I mean, I've always thought, what does Apple really have going for it? Their AI is so like not where the others are, to say it in the nicest way. Next we have Ford, and this has gotten some screen time before thanks to the option. So I have 158 shares of Ford. Essentially, I gave up 100 of those shares as collateral, saying that if Ford ends the week, or if Ford reaches expiry and it's trading above 1150, then I'll have to sell all my 100 shares at 1150 regardless of the price. I think the first expiry I had, it was at like 1175, so I'm like 25 cents, let me just roll this, it's gonna come back. I rolled it. It ended up at like 12.50. I'm like, let me roll this again. It's gonna come back. Now Ford is trading at almost $14? Almost $14, which is insane. So my call's like losing a lot of money, and I mean, geez, it's just. I swear, every time I try to get into Ford, I'm like, I have 100 shares here. Let me do options. It's just like, oh yeah, thanks for waking me up. I'll start rocketing now. Insane. So that's Ford. I might have only 58 shares the next time I do this video. Who knows? Next we have Target, and Target's a nice one. It seems like it's finding some momentum this past week. It has come. Let me click into this one. I'll take the sacrifice and go through with my slow computer. But yeah, I just really wanted to look at Target explicitly for this week's performance. It's still. Yeah, look at that. Up 4% on the week, $3.65 on the month. Up 8%, 8.7% on the month. It's definitely finding some momentum, Not complaining. I guess this is where it starts getting bad again. 3 month chart, it's still down 11.5%. Year to date, a disgusting 30.4%. We're only down 11. We DCA into this daily. I think I had stopped it. No, I didn't stop this one because we're so in the red. But it definitely was. It's seen like $3 a day, like recurring deposits. But now we're back up to 7 because I made some changes in the portfolio, which I probably should talk about as a segue from Target. Down only 12% now, which having bought 2 more shares that I did on Friday or Thursday, whenever it was. Yeah, I bought 2 more shares on Thursday because I sold out of this position here. General Mills, it's been a good run. I mean, I just wanted to get it out of my portfolio. It's not really the move right now. I have been dollar cost averaging into General Mills, like been trying, and I was gonna say it's not that I've lost hope, but if I sold, it means I lost hope, or I just see better opportunity. The real trigger was that I was going through one of my like my screens in Robinhood, and I saw my total like year to date uh realized profits and loss. Like you can see that, I guess, at least on your phone you can. I'm not sure if you can do it here. And I saw that my realized gains for the year was like 1,000 something. So I'm like, damn, I guess all these small positions I've been selling out of have been gainers, and I haven't sold any lost or losing positions in effort to just like get rid of these positions that I feel are almost dead weight or bag holding, or it's just not worth the squeeze type of thing. And General Mills was one of those. Target is another, let's say, bag hold or bag I'm holding, but I see a lot more potential in it, and I'd prefer kind of just consolidate those positions. They're not necessarily identical. Target is not the same as General Mills. Not well. I was gonna say not by a long shot, but you know what I mean. Like dividend wise, which is a strong reason why I'm invested in either of them. To be fair, they're both yielding close to 5% right now. So I just went with Target because I feel like that's a way riskier one. It's not like a. Well, I think Target is a blue chip economically, maybe. It's a dividend king, I know, all that good stuff. But I think Target, while it's more risky and more like up in the air as a question, it has more potential to grow. Or it has, yeah, really, it just has more potential to like grow quickly, is what I want to say. If General Mills does bounce back, it's gonna bounce back at such a slow rate. And let's say we do end up going in a bull market or a bear market, like that thing's gonna get plummeted. I guess with interest rates expected to go even lower this year, next year, all that, maybe that will benefit General Mills, but it will also benefit Target, So I just consolidated positions. Target, it's if I ever even make my way to 100 shares, like it's one I'd way prefer selling options against rather than I would General Mills. You know what I mean? So that was my last recurring investment. I sold my 27 shares at about $47. Rough numbers there, made $1,300, and you can see my buying power. It's not that I lost it in options. I really just threw that money into other positions to put it to work. It was weird buying on a super duper green day. Not gonna lie, I did not like that. However, with just the good CPI vibes on Friday and the expectation of interest rates going lower, the market's expected to pop. Like, I just didn't want to, let's say, assume that Monday's going to be a red day or we're going to pull back soon. We can, but it's like time in the market type of thing is better than timing the market. I'm sure you guys have heard that 1,000 times, and I can't believe I just echoed that. But it's true. It's true. I just wanted to put my money to work. If it was sitting here, it's not gaining any interest. I don't really see I have not transferred money from my Robinhood to a bank account in years, I feel. Never. Well, not never, but yeah, I didn't want to have it sitting here or transfer it to a savings account. So I just put it to work. If I need to hold it in a position until better opportunities come, I'm fine doing that. So Target, usually General Mills would have been in this area, but it's no longer there. I know I gave Home Depot a good chunk of what came out of General Mills, so now it's sitting at 4.42 shares, up only 0.42%, but we've seen 10% days at Home Depot. It's crazy to see it's pulled back so much recently, but interest rates is one that should positively affect one like Home Depot. At least it positively stimulates the economy, so Home Depot gets the benefits of people building homes, renovating, stuff like that. On a macroeconomic level, I suppose. Costco's been falling. I've been buying. Really not sure what's going on with it, but down 1% on Friday while the market was up a good amount. So I'm sure I bought some more on Friday with my GIS funding. Some realty income, got some of that, probably half a share or so, nothing crazy. 26.8 shares, down a little bit on this. I think I bought this above my average cost. Oh wait, this is my Friday return, so what am I saying? I was talking like nonsense earlier then. Alright, so Home Depot, we're not that much in the green. Costco, we're a little in the green. Realty income, yeah, because I remember buying above my average cost. I'm like, it didn't fall that much. Spy G, we're selling out of this one. I guess I low-key forgot since I sold General Mills. So selling out of Spy G, how much equity do I have in this? We have 1,600 in equity from this. Should be getting like 1,150 from Ford. Don't really think I'm rolling that out anymore. So might have like 2,800 to play with by. I guess I'm not gonna be selling Spy G all at once. I don't know. I might do that. I don't know, man. I'll let y'all know what I do. I don't have a plan right now. So let's sort this by total return one more time so we can get through the rest of this video quickly. Spy G, we got AbbVie, 25% above in the green for that one. AbbVie, I mean, I don't think you can go wrong with that. Amazon, for some reason, I've been really obsessed with increasing my share count in this. No dividends, so it's like a tough one to swallow because, I'm not a dividend investor, but it definitely makes me happier when I buy a dividend paying stock. 7 clean shares of Amazon though. I'd love 100 shares to start selling options on this. I swear I've been thinking about going all in on Amazon on my Roth and just selling options on that, but 14% with Amazon so far. SMH up 43.7% at 3.6 shares. That's an ETF that holds chip making companies. Very good one, at least for the chip. The AI craze we're having, everybody needing chips and automation, all that good stuff. SMH is honestly a really good basket of funds for the time being. JP Morgan Chase, a banking stock right there. That's my personal bank, one off my personal banks. Recently started a SoFi account, but I'm not invested in them. So I could probably sell options into SoFi. So that's an idea. We're up 16% with JP Morgan Chase. Seen better days, but hey, 16%, not complaining. APD, Air Products and Chemicals. This is one of my newer positions. We are down a healthy amount with that, but we continue dollar cost averaging. I'm not sure what the cost is right now, but hey, we're down 7% is what I can see. Visa, we're at 3.18 shares, up 17% on that. And Visa, I don't think I bought any with my General Mills money. I know I bought JPM. But Visa, we got to get that up to 17.5%. Visa is just a powerhouse of a company. And for now, I see it as a forever hold. American Electric Power, 9 shares. Electric stock right there, up about 18%. JEPQ. Some of General Mills went into this. Not gonna lie, I have 17 shares now. I think I bought maybe a share and a half. And we're up 6% with JEPQ. So I can't even complain. With the dividends too, that's insane. Main has been going down still. Up less than 6% with this. 16.2 shares, and I haven't been buying any more of this because I feel like I've bought too much recently, and I don't like for the gaps or the jumps between my monthly dividend payments to be too steep. So I've chilled out on main at least until the next dividend is announced, so I can like reset it or reset the share count and then start adding again, if that makes sense. Then finally we have a Riley, which has been going down some too. Looks like it's 13% in the green, 13 and a half. I'm sure it's trading below $100 now, 9.22 share. I'm not sure if it's an interest rate thing, but it's really a solid company, at least from the graph. So I'll continue buying more of that. I did recently increase my recurring buy to $5 instead of the 3 or 4. I've just been steadily increasing this. I started at $1.50. And $2 and $3, and now I think I'm at 5. So love to see that. QQQ, we're at $10 a day, SCHD 5 a day, SPY 18 a day, and then Target we have $7 a day as recurring investments. Coming over to this view, we can see that the portfolio is majorly invested. My $62 is only worth 0.12%. Stocks, the pie chart is coming together quite nicely. Selling out of one more position, General Mills, just makes it just a little bit cleaner. When SPY G goes, that's gonna be one less little section here. Then I guess I might get SoFi. SoFi is another one of my banks, and I mean, not to say you have to be bullish on companies you use in person, but it is doing well too. It might not continue forever. It will slow down eventually, right? But if I can sell options into that position, I think it would be a good way to use extra funds if I have it. I know I won't regret just putting it into SPY, letting it grow, and my other positions. But if I have some, and whatever, if it makes sense, it makes sense. That is the portfolio. Just sorting this by, I guess, size, equity. We have SPY at the top, largest holding. Then we have QQQ, SCHD, still number 3. Rocket Lab in comparison to that, there's about $700 between them. Interesting. And then next we have Microsoft, which Microsoft compared to Rocket Lab is insane. But yeah, there's all the holdings and how they look on a chart. Thank you guys so much for watching. I will see you guys in my next video. Peace.